Hello and welcome dear traders and investors. I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is November 28 and we're starting with euro-dollar pair with 10 low. The EURUSD pair has come close to the local peak of the upward cycle. As a result, the volume of long positions has slightly decreased, while the bullish sentiment persists. On the 4-hour chart, the RSI technical indicator is hovering in the upper area of 50-70, which points to the bullish sentiment. On the same time frame, 2 out of 3 alligators MAs are directed upwards, corresponding to the price's direction. In this situation, keeping the price above the level of 1.0950 could lead to a test of the local high. In perspective, this movement could strengthen the euro towards the range of 1.1000–1.1050. The complex indicator analysis revealed that in the short-term period, indicators point to stagnation, while there is a bullish signal in the intraday and medium-term periods. Let's trade with MACD indicator line. Jakub Nowak would help us is GBPUSD currency pair. For long positions, buy pound when the quote hits 1.2635. and take profit at the price of 1.2685. However, growth may not really occur today due to the pair's overbought condition. When buying, ensure that the MACD line lies above zero, or it just starts to rise from it. Pound can also be bought after 2 consecutive price tests of 1.2605. But the MACD line should be in an oversold area this time, as only by that will the market reverse to 1.2635 and 1.2685. For short positions, sell pound when the quote reaches 1.2605. and take profit at the price of 1.2565. Pressure will return in the case of low activity at the daily high. When selling, ensure that the MACD line lies under zero or drops down from it. Pound could also be sold after 2 consecutive price tests of 1.2635. But the MACD line should be in an overbought area this time, as only by that will the market reverse to 1.2605 and 1.2565. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Dimitrios Tsoupas. Early in the European session, gold is trading around 2015.98 with a bullish bias but showing signs of exhaustion. A technical correction is likely to occur in the coming days. A sharp break of the uptrend channel, formed since November 13, could accelerate the technical correction and gold could fall towards the 8-8 mirror level, psychological level of 2000 USD, and even towards the 21 SMA, located at 1978. On the other hand, in case gold breaks above the daily resistance one, located at 2021, we could expect it to reach plus 18 Muri, located at 2031 USD. It could even exceed the strong resistance 2035, reaching the psychological level of 2050. The positive outlook would be invalidated if gold falls below 1975 and below 7-8 Murray level on the daily chart. Then it could reach 6-8 Murray and 1937, and then could even head for the 200 EMA on the daily chart, located at 1924. Gold is very exhausted, and the strong bullish signal could be moderated if gold falls below the psychological level of 2000 USD. The exhaustion of bullish strength could lead to a technical correction because the Eagle indicator is reaching the overbought levels. So, traders have an opportunity to sell provided the gold breaks below 2008. The intraday pivot point is around 2010. In case gold bounces around this area in the coming days, it could be seen as a signal to buy, with targets at 2021 and 2031. Conversely, if gold breaks this level and consolidates below 2008, it will be seen as a signal to sell, with the target at 1978. What about cross-currency pairs? For example, CADJPY, Arif Makmur describes. If we look at the 4-hour chart of CADJPY, it can be seen that there is a correction from its strengthening movement, where currently CADJPY is trying to test the bullish fair value gap 108.03 and 107.80. As long as the tick line does not exceed the level of 107.58, then CADJPY still has the potential to strengthening and will try to test the 109.97 level as the main target and the 110.66 level if the momentum and volatility are supported enough. And finally, here's Laurie Bailey with AUDUSD currency pair forecast. Let's have a look. Yesterday, the Australian dollar reached the target level of 0.6612. This morning, it's strengthening beyond that level and continued to rise. It can now reach the target level of 0.6693. If Marlin does not become overbought when reaching 0.6693, the pair may continue to rise to the second target of 0.6775. The Australian dollar is rising despite a 0.2% decline in retail sales in the October estimate. In the evening, the US Consumer Confidence Index for November may decrease from 202.6 to 201.0, and the pace of housing cost growth for September is expected to fall to 0.4% month-on-month compared to 0.6% in August. Perhaps the Australian dollar will benefit from this data. On the 4-hour chart, the price is trying to consolidate above the reached resistance. The Marlin oscillator has settled in the bullish territory, attempting to accelerate movement into this area. Bears can suppress the emerging trend if they manage to push the quote below 0.6569, below the MACD indicator line. The target will then be 0.6514. That's all for today. See you online soon and good luck.